Well, it's going to be a disaster again, unfortunately, but and it's not even going to count all the gig economy workers who don't even show up in this data. But I would say the good news is we can see the new unemployment claims gradually decreasing over the past few weeks. And I think that trend is going to continue. So it's definitely a disaster. Nobody should be excited about it. But things are getting a little bit less bad than they have been compared to a few weeks ago. It's getting better.
There's always an obsession with the headline figure as well, but what are the figures that our viewers should be looking at for the longevity in the medium term? Should we be looking at the U6, the average hourly earnings? Which piece of data within the employment report do you think is the most apt at the moment?
I mean, I think the whole thing is just a big aberration, and it's so out of the ordinary that we can't even think about this in terms of the normal statistics. I would say the good glimmer of hope is showing up in stock prices, that stock prices are predicting that future conditions for businesses are going to be improving. The big thing I'm looking at is the VIX, the volatility index, implied volatility for stock markets. And we've seen that been plummeting from 80 now down well under 30. And so I think that the current unemployment statistics are a big problem, but I think they're, we hope, temporary. One of the big issues, I would say, is part of the CARES Act. We've got these very generous unemployment benefits. In many cases, they're paying an extra $600 per week. In many cases, the workers are getting more money to be on unemployment. The CARES Act was trying to get businesses to get those workers off unemployment, which is obviously a burden on the unemployment insurance. But now they're being paid to stick on the unemployment. So there's a lot of countervailing forces which are preventing the market from functioning as it should be.